Hey everyone, welcome back for another deep dive. You know we love to pick a juicy topic, and today is no exception.
Definitely juicy, and honestly one that impacts all of us, whether we realize it or not.
Right. We're talking high finance, the Federal Reserve interest rates, the whole shebang. And our guide for this deep dive is The Lords of Easy Money by Christopher Leonard.
Such a good read.
Huh.
I was surprised by how engaging it was, for a book about finance.
Totally. I was expecting something super dense and technical.
Yeah, like a textbook.
But Leonard does an incredible job of making these complex concepts accessible and actually kind of thrilling.
It's almost like a detective story in a way.
Oh, yeah, totally. Uncovering the hidden connections and, the consequences of decisions that most of us don't even think about.
And it's all about stuff that directly affects us, like the price of groceries, how much we pay for a car loan.
Exactly. So let's get into it. The Lords of Easy Money. What's the big takeaway here?
Well, I think the core argument is that the Federal Reserve and its policies, especially this idea of easy money, have had a profound impact on the way our entire economy works.
Easy money.
Yeah, basically it means keeping interest rates super low, making it easy to borrow money.
Which sounds good on the surface, right?
Yeah, cheaper loans, who wouldn't want that?
Yeah.
But Leonard argues that this easy money environment has led to some unintended and frankly pretty troubling consequences.
Like what? Give us some example.
Well, one of the big ones is this trend toward corporate financialization. Instead of companies using those low interest rates to invest in things like research and development or creating new jobs.
Right, things that actually grow the economy.
Yeah, exactly. They're using that cheap money to buy back their own stock.
Which does what exactly? Explain that like I'm 5.
Okay. Imagine a company has a cake, and that cake represents all the value of their business. They can slice that cake into pieces and sell those pieces to people, and those pieces are like shares of stock. Now, with easy money, the company can go out and borrow a bunch of frosting.
Okay, I'm following.
And they use that frosting to make their cake look bigger and more appealing, even though it's still the same cake underneath. So they can sell those pieces for more money, even though the underlying value hasn't actually changed that much.
Okay, that's a pretty good analogy. So the cake looks more valuable because of all the extra frosting, but it's still the same cake. And this is what's happening with these stock buybacks.
Exactly. They artificially inflate the share price, which makes executives and shareholders happy in the short term, but it doesn't do much to actually grow the company or create real value for the economy in the long run.
It's all about creating the illusion of growth rather than actual sustainable growth.
That's a great way to put it. And it's this focus on short-term gains that Leonard is really critical of. He argues that it's creating a system where everyone is incentivized to make a quick buck, even if it means sacrificing long-term stability and prosperity.
And the Federal Reserve is kind of at the heart of all this, right? They're the ones pulling the levers on interest rates and controlling the flow of easy money.
Absolutely. And Leonard really dives into the role of the Fed and how its decisions have shaped the economic landscape we see today.
It's fascinating that one institution can wield so much power, right?
It really is. And especially when you consider the background of the current Fed chair, Jerome Powell. He comes from the world of private equity, which is a very different perspective than someone with a traditional banking background.
So how might that influence his approach to monetary policy?
Well, that's one of the big questions Leonard raises. Does his background shape his decisions in a way that benefits Wall Street more than Main Street?
That's something to think about for sure. Now, we can't talk about the Fed without mentioning this thing called quantitative easing, or QE. It's something we hear about all the time, but I'm not sure most people really understand what it means.
Yeah, it sounds super technical, but it's actually pretty simple.
Oh, go on then. Break it down for us.
Basically, QE is imagine the Fed has a giant money printing machine.
Oh, okay. I like where this is going.
And they can use that machine to inject trillions of dollars directly into the economy.
Wow, trillions. That's a lot of money. And they actually did that.
Yeah, they did it on a massive scale after the 2008 financial crisis.
Right.
The idea was to prevent a complete economic meltdown, keep things afloat. But, and here's where things get interesting, pumping that much money into the system can have some unintended consequences.
Okay, so what are the downsides of all this money printing? Spill the tea.
Well, one of the main concerns is that it can drive up asset prices. Things like stocks, bonds, real estate. So people who already own those assets, the wealthy, they benefit the most.
And what about the rest of us?
Yeah, the average worker doesn't necessarily see those same gains.
Hmm.
And that's a big part of what Leonard is trying to highlight, that the Fed's actions, while maybe intended to be neutral, can actually exacerbate inequality.
So we have the situation where easy money is flowing, asset prices are soaring, but the gap between the haves and have-nots is widening.
That's the crux of it, yeah. And it's not just about the Fed, of course. There are a lot of factors contributing to inequality. But Leonard argues that the Fed's policies are playing a significant role.
He's really making us question this idea that the Fed is this purely neutral, technocratic institution.
Right, he's saying, look, their decisions have real social and political consequences.
And we need to be aware of those consequences. So we've got easy money, corporate financialization, a widening wealth gap, and the Fed at the center of it all. Where do we go from here?
Well, that's a big question, and one we'll continue to unpack as we dive deeper into the lords of easy money.
Because this is just the beginning, folks. We're just scratching the surface here. Stay tuned because we've got a lot more to uncover.
A lot more. Buckle up.
Welcome back. So we've been talking about this whole easy money environment and how it's impacting the economy. But let's get real. How is this actually playing out in our daily lives?
Yeah, I think one of the biggest disconnects is between Wall Street and Main Street. You know, we hear about these record-breaking stock market highs,
Right, like the news is always talking about how well the market's doing.
but for a lot of people, that doesn't really translate into tangible benefits.
Exactly. It's like two separate realities. The stock market might be booming.
But then you go to the grocery store or try to fill up your gas tanks.
And you're like, wait a minute, things are getting more expensive, not cheaper.
That's the thing, right?
Mm.
This easy money, it's not necessarily trickling down to the average person. In fact, it can feel like things are getting harder.
So where is all this money going? If it's not helping Main Street, who's benefiting?
Well, Leonard argues that a lot of it is getting trapped at the top.
Trapped at the top.
Yeah, like it's benefiting the people who already have a lot of assets.
Yeah.
You know, those who own stocks, bonds, real estate.
And because of easy money, those asset prices are being inflated.
Right. So the rich are getting richer.
But the gap between the haves and have-nots is widening.
And that's one of the things that Leonard is really concerned about. He argues that the Federal Reserve's policies, even if unintended, are actually contributing to this trend.
Okay. So we've touched on this idea of corporate financialization a little bit earlier, but can you break that down a bit more for us? What does that actually look like in practice?
So imagine you're a CEO of a major corporation. Thanks to these low interest rates, you've got access to a ton of cheap credit. What do you do with all that money?
I guess it depends on what your priorities are, right?
Exactly. The traditional view would be that you invest it in things that grow your business
Like research and development.
or expanding into new markets.
Maybe giving your employees a raise?
All of that, yeah. But Leonard argues that in this easy money environment, there's a strong incentive to prioritize short-term financial gains instead.
Meaning?
Well, one of the easiest ways to do that is through these things called stock buybacks.
Stock buybacks, right. I've heard that term thrown around a lot, but honestly, I'm not entirely sure what it means.
Okay, so basically, a company uses its borrowed money to buy back its own shares, which reduces the number of shares that are out there, available.
Okay, fewer slices of the cake.
Exactly. And when you have fewer slices, the price of each slice goes up.
Okay, that makes sense.
So it makes the company look more profitable on paper, even if nothing has actually changed about the underlying business.
So it's all about creating this illusion of growth.
Exactly. It's a financial maneuver. And it benefits executives and shareholders in the short term. But it doesn't necessarily create real value for the company or for the economy in the long run.
Okay. And then you've got the whole world of mergers and acquisitions. I mean, are those always a bad thing?
I wouldn't say they're always bad. Sometimes they can make sense. Like if two companies can combine their strengths and create something new and innovative.
Right, like the sum is greater than the parts.
But Leonard argues that in this easy money environment, mergers and acquisitions can become just another form of financial engineering.
Financial engineering.
Yeah, it's basically just about, gobbling up your competitors.
Consolidating market share.
Squeezing out more profits. But it doesn't necessarily lead to more innovation or more jobs. In fact, often it leads to the opposite.
Job losses.
Reduced competition and ultimately less innovation in the long run. It's like this vicious cycle.
So Leonard's saying that the Fed's easy money policies, while maybe well-intentioned, are actually making this problem worse.
That's his argument, yeah. That the Fed isn't as neutral as it might seem.
Their decisions have real consequences.
Social and political consequences. And they're impacting all of us, whether we realize it or not.
And one of the most concerning consequences is this widening gap between the rich and the poor.
That's right. Easy money inflates asset prices, which mainly benefits people who already have a lot of assets.
The people at the top.
But if you're living paycheck to paycheck, you're not really seeing those same gains. In fact, it can feel like you're falling further and further behind,
Because the cost of living keeps going up.
while wages stay stagnant.
Feels like the system is kind of rigged against the average person, you know?
Yeah, I think a lot of people feel that way. And Leonard's book really highlights those systemic issues.
So if this is a problem, what's the solution?
That's the million-dollar question, isn't it?
Is there any way to break this cycle? Create a more equitable system where the benefits of economic growth are shared more broadly?
Leonard doesn't necessarily offer any easy answers, but he does urge us to recognize the political nature of monetary policy.
Okay, so it's not just about technical adjustments to interest rates.
It's about power. It's about who benefits from the system and who doesn't.
And we need to be having those conversations.
Absolutely. We need to demand greater accountability from the institutions that wield so much power over our lives.
The Fed included. So it's not just about the Fed, though, right? Leonard also talks about the need for smarter fiscal policies.
Right. Fiscal policy is the other side of the coin. It's about how the government spends money and taxes its citizens.
And Leonard argues that we need policies that support workers,
Invest in public goods.
promote economic opportunity for all.
Exactly. Things like affordable housing,
Mhm.
accessible health care, quality education. These are all essential ingredients for a thriving society.
It's about investing in people, not just profits.
Exactly. And it's about creating a system where everyone has a chance to succeed, not just those who were born with advantages.
And we're back. We've been digging deep into the lords of easy money, exploring this complex world of high finance. But honestly, it can all feel a little bit, well, doom and gloom.
It's true. These are some pretty heavy issues we've been talking about. But I think it's important to remember that Leonard doesn't leave us completely empty-handed. He does offer some glimmers of hope, some potential pathways forward.
Okay, so let's talk about those. If we're facing all these challenges, what can we actually do about it? Where do we even begin to address this?
Well, I think one of the key takeaways for me is this idea of shifting our perspective. We need to recognize that monetary policy isn't this sort of neutral force operating in a vacuum.
Right, it's not just some abstract concept.
It's a tool, and it can be used to shape outcomes.
Hmm.
And those outcomes, they have real impacts on people's lives.
So we need to be more aware of how the Fed's actions are affecting everyday people.
Exactly.
Yeah.
And then, start thinking about how we can use those levers to create a system that actually works for everyone.
A system that's more equitable, more sustainable.
Right. And that might require us to rethink some of our assumptions about how the economy works.
So, what kind of assumptions are we talking about?
Well, for example, Leonard argues that we need to move away from this obsession with short-term profits.
Oh, yeah, we've been talking about that a lot. This whole idea of, make a quick buck no matter the cost.
Right. Instead, we need to encourage more long-term investment in things that create real value for society.
What specifically? What are some examples of those kinds of investments?
Well, things like infrastructure, education, research and development, supporting small businesses. These are all investments in our collective future.
I like that. Investing in our future. Because these are the things that create jobs, they boost productivity, they foster innovation.
And that leads to a stronger, more resilient economy. An economy that benefits everyone, not just a select few.
Okay, I'm with you. Long-term thinking, invest in the things that actually matter. What else? What other solutions does Leonard propose?
Well, he also talks a lot about the need for more transparency and accountability, especially when it comes to the financial system. The Federal Reserve, despite its power, operates with a surprising amount of secrecy.
It's like they're making these huge decisions, but behind closed doors.
Right, and that makes it really difficult to hold them accountable. So Leonard argues that we need greater transparency so that we can have more informed public debate.
And hopefully lead to more balanced, more equitable policies.
Exactly. It's about bringing those decisions into the light so we can all see how the system works and who it's really benefiting.
It's about empowering people, giving them the information they need to demand change.
Exactly. And I think that's a really important point. We're not powerless in all of this. We have a voice and we can make a difference.
So the Lords of Easy Money, it's a call to action, right? It's about understanding these systems, these forces that are shaping our economy, our lives.
And it's about demanding better, demanding a system that works for everyone.
Absolutely. And I think that's a great place to wrap things up. So much food for thought, so many things to consider as we move forward.
Right. This isn't the end of the conversation. It's just the beginning.
Exactly. So, to all of our listeners out there, keep exploring these ideas, keep asking questions, and keep pushing for a more just and equitable world.
Because ultimately, the future is in our hands.
That's right. And with that, we'll wrap up this deep dive into the Lords of Easy Money. Thanks for joining us.